read from the chips this morning. Taiwan Semi reporting a 45% jump in July revenue compared to last year. That was thanks to strong demand for the company's AI chips. Shares are, well, they're bouncing around along the flat line here, but a big outperformer on the year.
Okay, one of their key customers, of course, is Nvidia, and that stock has been whipsawed this week. It's coming off what is its best day this month, but the company has shed about $1 trillion in market cap since mid-June when it was at its highs. Let's get more on that name and a bunch of other semis. Joining us now is Bernstein's Stacey Raskin. Stacey, always great to have you. You know, let's just start on Nvidia. Some of the news this week on the delays potentially as a result of sort of design issues around Blackwell. Just give me your take. Is it real, and what's it going to mean?
Yeah, it seems like it's real enough. There's enough smoke there. There's some fire. We've had some confirmation from other folks in the supply chain. Supermicro kind of alluded to it, and so it seems real. It doesn't seem major, right? It seems like a relatively minor design issue. It looks like they may have already fixed it. We've got maybe a 2 to 3 month delay, I think. What that really means is where people were hoping that like real volume shipments would happen in calendar Q4, it looks like it may be Q1. So it's a slight push out. You have to remember, this stuff is difficult to do. So I mean, like even Nvidia is not necessarily immune to it.
Here we have the daily price chart for Nvidia Corporation, stock ticker NVDA. So if we are going to take this prior assessment that we've seen here and view the stock from a positive viewpoint and suggest that these recent Blackwell issues are not as bad as they might seem on the face of it, we do need to start to assess whether or not this recent rally in share prices is the real thing and whether or not Nvidia stock can continue to move higher. So if we move down on the price chart a bit here, we can see that we have now broken through some critical resistance levels, which came in previously at the 108.80 level. I'm going to stay on the daily price chart here for a moment just so that we can see how the stock is currently behaving near its exponential moving averages. Currently, we can see that the stock is running into some resistance near the 20-day and 50-day exponential moving averages. So this essentially would be the yellow line here, which is the 20-day, and then the orange line here, which is the 50-day exponential moving average. At the same time, we have managed to cross above the 100-day moving average, and the stock managed to find some very significant support and bounce from the 200-day moving average as the stock posted its prior lows near, this would be the $90.70 level. In addition to this, we can see a few other factors which are continuing to support prices. Specifically, we can point to the indicator reading here in the relative strength index, which has now broken above its prior downtrend line, suggesting the fact that prior negative momentum in the stock has now completed and run its course. In other words, this negative momentum in share prices is unlikely to govern share price activity going forward. As we can see here, the share price has managed to raise itself high enough that we have broken above the prior downtrend line in the relative strength index, as well as the exponential moving average for the relative strength index, which would be the yellow line on the bottom of the chart here. So when we take these factors into consideration, along with the fact that trading volumes continue to rise, this does start to look like a bounce here is becoming more sustainable. In addition to this, we also need to point to the fact that share prices have been experiencing trading volume activity that is more focused in the bullish direction. As we can see here at the bottom of the price chart, there are more green trading bars than we are seeing red trading bars, and those trading bars are starting to increase in size. So in other words, more of the market is entering into this stock and placing trades, and more of those trades are being focused on the bullish direction. Currently, as things stand, we can move into the price chart here one final time on the daily time frame and look at the most recent resistance zone, which has now come in at roughly $111, just above there, roughly $111.10. So as we can see here, what's currently creating resistance is the fact that the share price is bouncing away from to the downside in relation to its 20-period and 50-period exponential moving averages.
In the meantime, though, like we've had hyperscale CapEx guides that are all still going up. All of those would have incorporated whatever is going on. Like they didn't just find out about this, because of the news stories. They would have incorporated it. And Nvidia's got strong demand for their existing architecture, which is called Hopper, and it looks like they're likely increasing production of that to try to backfill and smooth things over until we actually get the Blackwell launching in more volume, maybe a quarter later. But structurally, I don't think it's that big of an issue. Now sentiment-wise, clearly it's impacted the stock. I think the stock's been two things. One was there's just been a general reduction of sentiment on the AI space in general. People are just starting to look at lots of dollars are getting spent. They're wondering about where's the return. So the sentiment wasn't, quite as supportive as it had been. And then you have this on top of it, which weighs on it. So, I mean, that's kind of what's been going on. But structurally, I don't know that anything really has changed with NVIDIA.
Right.
We got a little push out. I think it'll be okay.
So essentially what he's saying here is that he thinks we'll be okay, quote unquote. So if this is true, what it really looks like here, based on this positive outlook that he currently has, what we would be seeing here would be a support level at 9070 that would remain intact. Of course, this is the bullish viewpoint, and it does suggest that the recent news events that have surrounded Nvidia are not likely to force share prices to move much lower.
All right, well, right. I mean, demand is demand. It's still there, as you point out. Well, what about the stock itself and the multiple and what we've seen in terms of that, and whether that makes it even more compelling, I guess, from the perspective of somebody like yourself?
Yeah, look, so NVIDIA's never really been all that expensive. I mean, even at its peak, it was maybe 40 times forward earnings. But the sell side forward numbers that's based on are likely still too low. 40 times is about its 5-year median or 5-year average, so it's not actually that expensive. It's cheaper now. It's probably 30 times now. Yeah, at least I think you've de-risked it a little bit, like going into the back half on the back of this. And if they do announce some kind of a delay, if they verify it on the call, at this point it won't be like everybody kind of knows about it. So yeah, we can kind of work through this. Demand still looks really strong. If you're pushing, the volume into next year, it actually makes next year look better. Again, more upside to the numbers, hopefully. Yeah, I think the valuation here still looks quite attractive.
So that clip is a bit difficult to hear. They do their recordings live at the New York Stock Exchange, so you do hear a lot of background noise within those clips more often than not. But overall what he's saying is that he doesn't think that the forward multiple is a big concern at the moment. He still thinks that Nvidia is a strong buy at current levels, even though we are seeing the stock trade at somewhat elevated levels. We're not quite at the all-time highs yet, which have posted above the $140 mark, and we're currently trading right around just below 110. So there's still a fair amount of room here to the top side if that were to occur. But apparently, in his view, he still thinks that the stock has a fair amount of room to extend to the top side. So here's the current market outlook for Nvidia Corporation, stock ticker NVDA. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership and start trading stocks with the pros.